Have you been trading this week?
Yeah, I took a few trades that, like, to be honest, mate, I shouldn't have, but they played out all right. But it's just with them challenges, I've got to take positions I don't want to. You know what I mean? But obviously, with me waiting till break even now, I can take. Obviously, the challenge doesn't start until you take your first trade, so I'll probably just wait for all the rest of the heavy fundamentals that are coming out and just get straight back in there. Like,
Yeah, it's a bit of a weird one right now. I'm like, every time I'm looking at the markets, I'm just a bit thrown about what's going to happen. And I think it's really going to take a fundamental change to give us a bit of direction.
I might have to just by waiting for, obviously, just being in my challenge now with these fundamentals. I've understood something because I've been waiting for FOMC. I can see how the market waits and it primes, and then it's obviously looking at areas of consolidation on higher time frames. It's like it can be explained with fundamentals, and do you know what I mean? I'm starting to understand that the chart. It's like everything that's happening. It shows in the chart. You know what I mean? I used to think the chart was everything, but I'm understanding now fundamentals do play a massive role, like, you know what I mean? It's
I
all
think
just a learning
in
curve.
these kinds of times they do, but I think most of the time, I think you'll agree, TA over FA. It's like 99% of the time, it's really just down to the technicals. But the fundamentals give a direction when we've got a bit of, let's say, choppiness, what we've got right now.
Yeah, that's it. I'm used to just trading TA. Like you say, I didn't really pay a lot of attention to fundamentals, but obviously with me purposely waiting for the FOMC to come out, I've been watching the market, and it's, like you say, the big wicks up and down, the choppiness. It's clear consolidation, and it's like fucking. I can see, obviously, when all the fundamentals are out the way and we get a bit of a direction, then obviously it's just like a learning curve, mate. I've never seen the market consolidate the way it has across all instruments. Do you know what I mean? And it's like it makes sense now why it has, because obviously, do you know what I mean? It's all based on fundamentals, like.
Yeah, I think like right now in this kind of space, asset classes really fit into two baskets, and that's everything else, and then the dollar, and it's really asset classes against the dollar right now. That's why I think we're seeing sort of the same pattern sort of printed across any asset.
Yeah,
It doesn't even matter if it's a speculative asset, but we are getting bigger moves in BTC than I would say the S&P. So I think most probably still consider it the most speculative asset, and it's still pumping as hard. But I think that's where the TA comes in, and we just don't have as much resistances between those levels as, let's say, a
yeah.
historical index like the S&P that's built levels for a long period of time around this range.
Hey guys, sorry, I was
Oh, look who it is.
sorry, I was busy. My Amazon guy came in and he got I ordered a deodorant online, and he got me the women's deodorant instead.
Oh
So
man, women's product is the one. Just use women's product.
yeah, then I smell fruity, bro.
Honestly, before I was in a relationship, I didn't even care what I was putting in my hair and like on my skin. And then you go in and you start getting a partner, and they get these like nice, beautiful colored bottles. They look so aesthetic. You touch your hair afterwards, it's smooth, it's silky.
I started using that Aussie shampoo because we were
Look at that. Look at this, look at this. I've got like some bounce, a bit of volume going on. And you don't even know what it does half the time. Like today, I picked up this like detangler. I don't even know what detangler does. Put it in my hair, but I'm liking the feel.
I don't think it is long enough for detangle it. It's not gonna tangle that one.
I've got curls for the girls. All right, should we do some FA?
Yeah, let's do it. Fundamentals.
Actually, did you see this whole Kraken takedown? Well, not takedown, I would say, but limitations on the staking as a service.
Was it Kraken or Coinbase? That's Kraken, right?
This Kraken, yeah.
Right,
And
yeah.
they paid basically a 30 million fine. But I was just like briefly, like obviously I've seen it during the week, but I've just seen some of the metrics behind Kraken. I was just doing a bit of a deep dive. They were offering up to 20% APY. It does sound a bit Ponzi-ish. Not sure, but that's just from staking returns. So there's obviously incentives behind those pools. that need to be looked into. I don't know if that 20% APY just applies to the ETH staking, which is kind of stuck. So they basically offered staking as a service. There's loads of ETH like stuck in this stake contract and won't be released until, I think was it March I said that Shanghai upgrade comes through. But if that 20% is legitimate, I don't know why we haven't been on it. We haven't capitalized on it. And it just seems to be for the US market. So I think a lot of it is to do with if they're able to offer these APYs, then what is a bank going to make out of this? And I think this goes into what I was saying like a long time ago, that everything is just going to become a bank now. All of the regulation, like anything to, and I think what you'll see is that they're all, no matter what their name is, etc., they just become custodians. I think that's just how banks are going to be defined now, as custodians. But the biggest issue I see with this whole SEC thing, the reason why they sort of went after them, does seem to be about the not sort of highlighting the risks of, okay, they are the custodian of your coins, and as soon as you do stake them, you're basically giving them the ability to invest it into an investment contract or an investment product. So that needs to be disclosed. So I don't know, somehow Coinbase has got out of this. And I think Kraken's just smaller fish. Binance has been doing this for a long time. I don't know if Binance US still has the features, but it's had staking as a service and it's been acting as this layer 3 for a long time. So I think Kraken's really just been taken down just to make a point. But 20% APY. That's beautiful. Nice. It's beautiful. Like what you could increase your IRRs to just by putting into that contract with some of like the borrowing and lending contracts. I was looking, I haven't been digging deep into projects recently just because of what I'm doing with rest of work. And a friend of mine showed me this new uncollateralized lending program on Solana. So what this company, they're a data analytics company that's effectively just measuring all of the on-chain analytics. And what they've able to create is a on-chain credit score. So they're offering uncollateralized loans based on your on-chain interaction. So any engagement you've had with DeFi, your ability to pay back, like lending protocols.
Oh,
so
that's interesting.
Very, very interesting. It's a very good use case. And I think it kind of just narrow you down to a single wallet. Like I've got like 40 wallets, I think, and then burner wallets just because you'll create a wallet to test a site out. So it does give you a bit of it gives you, I guess, a home base for your wallet where you do build up these credit scores. And it might be like, I think even take advantage of it now while it's early days and start creating a blockchain credit score with these guys. And they're backed by Solana Foundation as well. So I see a lot of credibility behind them. So despite all of the SBF bullshit.
Can you throw that link in?
Yeah. I'll share it in the Telegram group. I'll put it in the free group. Yeah, definitely.
That's starting now, isn't it?
Yeah, just start now. Just take out small loans against your collateral and just keep paying them back. Doesn't matter what, like increase the term and just play with the metric. Exactly what people do with their credit cards.
Yeah, just a crypto credit score, isn't it, mate? Like you say, mate, it's good to get ahead of the curve, mate, now and just fucking start building.
Yeah, exactly.
Get involved in
I'll send that to you now, actually. There was a few ones. There was something else called Hade Swap that's allowing you to effectively trade NFTs like it's coin. So they've created a derivative of the NFT, which is pretty cool. So the uncollateralized lending program is called Atadia. So I'll just share that in the group for everyone.
Cool, man.
And I guess those that are watching on YouTube, and I'm doing the Spotify thing now, so those that are also watching on Spotify can find it in the bio.
Big Spotify deal.
It's as big as Rogan's. I'm just going to put it out there. It is as big as Rogan's Spotify deal.
You finally caved, Darren.
Illuminati. They came, they got me. I went to a secret island. I did it. I accepted it.
I knew it.
They now have all of the collateral in the world on me and they will threaten to expose it. So no, I think it's good. Like I think it's a good way for those that can't sit and watch a video and just listen in the car. Because I do so much. I listen to all of my podcasts and audiobooks when I'm on the road. If I'm like this week, last week I didn't really. I was just working, so I wasn't on the road at all. So didn't listen to anything. I'm behind. So I think it's good just to give another option out there.
But listening
Anyways.
to technicals in in audio format, that would sound retarded.
You just got. It's probably going to sound retarded. I apologize if it sounds retarded, but I think, look, if it sounds retarded, that's on you, Evan. Like, that's on
Start
you.
painting more of a picture with your words.
Yeah. Visualize. But just everyone close your eyes. If you're listening right now, close your eyes and just visualize these charts. Yeah, just astro project yourself onto TradingView and you can visualize. All right. Let's go.
All right, let's begin. Fundamentals. Let's begin with fundamentals. Last few weeks have been extremely choppy. Me personally, myself, the last 6 weeks I've been just I took 3 trades, just 3, because that's how choppy the markets have been. And especially last week, there wasn't much movement. There was a lot of sideways consolidation movement, and I'll tell you exactly why. But first of all, let's look at the fundamentals that happened this week. Let's look at the important ones. The most important one was Powell's speech. Maybe let's look over a few comments before we move into the next week. Actually, there wasn't a lot that happened this week. Let's look. The one thing people have noticed is Powell's stance, like after actually interpreting his actual comments, now they realize he's extremely hawkish. Because last week when the FOMC meeting happened, everyone started reacting and thinking that all his comments are bearish with the US dollar, and the whole market got euphoric, right? But now after looking at his comments and giving it time, people realize maybe the Fed are still hawkish, right? Bullish with the US dollar. So that's what his comments even this week solidified. So he does mention the process will take a little more time, right? Disinflation has begun, but it has a very long way to go. A lot of uncertainty. He also commented on the NFP data that came out last week. Job report is certainly stronger than anyone expected, right? And he also mentioned that the policy has to be at a restrictive level for a period of time, right? So the US, they have to keep the interest rates high for a period of time. And they also need to do further interest rate hikes, which is extremely hawkish, right? So he mentions 2% again is the inflation target they have. And what else? So he does mention 2023 will be a year of significant decline in inflation, but we still don't know. We still haven't seen hard statistics because it's contradicting what he just said, that they still need to do further interest rate hikes, right? So I think he's trying to calm down the market because everything he says has an effect, right? So he needs to tiptoe around these comments that he makes, right? So he needs to balance them out. So let's look at anything else that is important.
I think that's quite an important point to make, actually. I had a friend, he's a developer, and he was asked, it was from some major financial institute, to basically create a program that evaluated the sentiment of text and speech. So if there was an interview on Bloomberg or these kinds of notes that come out, this AI would basically be able to interpret, okay, is this bullish, bearish? And they would make positions based off that sentiment. So with this, like, you're right, it's so contradictory because I think they've had to address these kinds of technology platforms that are able to do this.
That's interesting, right?
Yeah, but there's 2 things here, isn't there? There's obviously the size of the rate hike and the rate of the rate hikes. I think those are they're 2 completely different things. One is obviously the increasing the interest rate in a much smaller time frame. One is sort of longing it out. And I think they increased those interest rates very steeply. And I think there was some other infographics we looked at earlier where they were compared to other interest rate hikes, this was a very steep curve. And now they're starting to sort of taper off that, which, like with anything, if you're going in hard, the same with a chart, if there's this much, what's the word? How could you put it? If the gradient of that line is as steep as it is, there needs to be some sort of slowdown or pullback there. And they are, we said at the beginning, like they're going to be balancing between both because they're in this period of, I would say, still stagflation.
Yep, exactly. That's a good point to mention. Also regarding like people designing analysis and their bots probably based upon the text, because if he mentions everything hawkish, the market loses balance. So that's interesting as well. One thing that was thrown around this week was as well was that maybe the US government might default, right? So where was it? Here. So Powell mentions that no one should think Fed can stop the debt default case, right? And this term was thrown around throughout the week. Even Bank of America, I think it was, they said they're preparing in case there is a debt default. So that's going to be interesting to see how that unfolds. What else is there? So it's all hawkish. All his comments are kind of pretty hawkish. I mean, we have been on a hawkish stance with the US dollar since a very long time. Our analysis hasn't changed, right? What else? Let's see. See, he does mention wages increases have come down, but they need to come down a lot more to be sustainable, right? That shows you inflation is still raging high, right? Let's see what else. Yeah, so that's it with Powell's comments. Everything was pretty hawkish with the US dollar. Let's look at the other fundamentals. We had a lot of FOMC members speak. Yeah, go ahead.
Sorry, I just feel like if there are people listening on Spotify, I just need to like do what annotate or something. MM is currently scrolling through Forex Factory for those that are on Spotify.
All right. So on Wednesday, Feb 8th, we had another FOMC member speak, and he also had very hawkish comments. Need to maintain a restrictive stance for a few years, right? Few years, not just this year. So again, very hawkish. All other FOMC members were starting to make a lot of hawkish comments, right, throughout the whole week. Monetary policy hearing with British pound, which happened on Thursday, Feb 9th. Nothing much, nothing changed there. I think the big one this week was British pound GDP, and it contracted. This is a contraction, right? Negative. It's negative 0.5%. The forecasted was negative 0.3%, and the previous was 0.1%. So this is a contraction because if you look at the previous stats, what do we see? It was in the positive, right? So we now see a contraction in the economy, which is very interesting because it's not only contracting, the inflation is still raging high. So UK is the British pound is in a very, very bad situation because the economy is contracting and the inflation is very high. I think I was reading a few articles and they also started to, it was very weird, but they were kind of blaming football. They were blaming Premier League during December that they didn't have much GDP growth because I think Premier League was closed in December. And yeah, go ahead.
Was that a pause because of the World Cup?
Yeah, a pause because of the World Cup. So they were blaming the World Cup as well during November.
Oh, just like one more hit at Qatar. Like, let's not forget, like the whole of the UK economy is underpinned by Qatar finance.
Yeah,
I didn't say that.
So we had that. We have preliminary GDP that was stagnant at 0%.
But a lot of it in the UK, like there was articles that went out, it was last week or the week before, that the UK was going to get hit the hardest out of all of the major economies in terms of GDP growth. So that's, I guess we're now visualizing that now that the GDP is contracting, but this is all still a knock-on effect from, I would say, Brexit, where we spoke about GDP growth, where they rely on effectively immigration. And if you start limiting immigration into the country, of course GDP is going to contract. And I think a lot of the discussions right now in the UK are in regards to immigration and what their stance is on it. And if I am, from what I've seen, there is that they're looking to take quite a hard stance on immigration, in which case GDP is going to fall. However, they're then talking about programs that I mentioned in the Telegram group, which, like, Dubai was probably one of the first to integrate during the pandemic, and Indonesia as well, where you have these new sort of talent-based visa systems, no different to what I guess a US green card is, that allows you to work there, but you start attracting, I guess, high value individuals that are qualified, can generate per head a lot more capital than someone that's less skilled. And that's really where I think you get the most value out of GDP growth.
That's interesting. Yeah, that's what I've been noticing. The same visa systems they're bringing it to UK, US, even to European areas like Spain, Portugal. I mean, there's a lot of they're all adapting the Dubai laws, right, with visa and immigration. And it's a good point you mentioned, because they have become stagnant, and the only growth that can happen is if they can bring in laborers and who for a short while to give a boost with the GDP. That's an interesting point. Yeah. This week, the only last thing that we had this week, which gave us a boost in the DXY, the dollar index, was the University of Michigan consumer sentiment, and that came in higher, right? Higher than the forecast, higher than the previous month, right? So if you look at the stats, this is the highest reading we had since November of 2021. So that's quite big. Sorry, since December, I would say. So that's a very big number that gave us that shows you the consumers are still quite positive, and that's not a good thing actually. If the rate hikes are working, the consumers should be feeling pain, right? Because the growth at the moment, the growth is the enemy. Because if there's a lot of growth, that shows you inflation is still persisting, right? So let's look at this week, the current week. It's a big week finally, and the reason we had that choppy week was because we have CPI data on Tuesday, Feb, for US dollar. And let's look so the forecast is 6.2%, and the previous month was 6.5%, right? So they are expecting a drop in CPI by 0.3%, which will be interesting to see. Because the previous month we had a massive drop, right? It was a 0.6% drop. So they're expecting a 0.3% drop only this month. So let's see how the market reacts with this. And I would suggest, if you're going to be trading any US dollar instruments, maybe wait till the CPI data is out and trade probably on Wednesday, right, on Feb 15th. But that's up to you. If you want to take a risk, you can go ahead, but there's a possibility you can get whipsawed. So core CPI, this is interesting, by the way, the core CPI, notice the core CPI, that's projected to come in higher. And why is that projected to come higher? Because there is less manipulation with this number here. Why? This is excluding food and energy. So energy is heavily manipulated, the prices. So this number here excludes food and energy. And what do you notice? Inflation is still going up. So that's interesting. They are trying to manipulate energy and try to mess with the statistics. But here you see clearly that inflation is still going up.
What else is in that basket, MM?
It has everything that CPI has, but excluding food and energy. So services, consumer-related stuff. Maybe I can open this and show you. Let's see if I can. Yeah, there we go. So food-related stuff, energy stuff. This is under core CPI. Yeah, I think this is the CPI data. They're not showing us the core CPI here, but what would be here? The food and the energy side. These items would not be here, pretty much.
Okay, so that leaves us with vehicles, used cars, new cars, clothing, medical care, services that don't use energy. I'm guessing that is
Yeah.
shelter, transportation, and medical care. And I think it would be interesting to actually see this index with just, I guess, getting fuel out, and that would give you a determining factor of how the, I guess, the lower class would suffer. And I said this before, like fuel's not really having as much an impact on the really low class who are kind of reliant on public transport, etc. This and that would give you a really real interpretation of who where what inflation is. I might do some work on that just to see if we can create a little basket of our own to give an interpretation. But once again, the data that underpins all of this isn't the most accurate either.
Yep, exactly. So if you look at the previous months, with the core CPI itself, in majority of the months, what do we see? It's been going up, up, up. So just on November and December, we had a small contraction, but again, it started going up, right? So inflation is still persisting here with core CPI, an interesting number to look at. What else do we have? We have CPI with the British pound as well, projected to come at 10.3%, extremely, extremely high. And it's projected to drop by just 0.2%. And if you look at the previous months, what do we see? It's been in double digits since October of last year. So it's extremely, extremely high, very high. Core CPI, just a tiny drop, nothing much with British pound. And what else? I think RPI was the one where we saw for this data looks at retail price index for the consumer. For this is more accurate, I think, when basically it's the index where if you go to buy food at the groceries or if you go to a restaurant, what kind of inflation are you facing, right? So that's extremely high at 13.2%, very high, right? So the UK economy doesn't look really good at the moment. And then also on the same day, on Feb 15th, we have core retail sales, Empire State Manufacturing Index, and retail sales. This is going to be important as well. This is going to give you an idea on how the retail sales are doing. And if you notice the number, what do we see? It's coming in forecasted to come in higher. That shows you what? Inflation is still persisting. People are still spending money. So this is going to be an interesting number. Also, the Empire State Manufacturing Index projected to come in higher from the previous month, which also shows a recovery in the manufacturing index. Also, again, showing inflation is still persisting. All the statistics, if you even look at this one, forecasted to come in higher, right? So inflation is still persisting. So nothing surprising here. Thursday, we have the PPI, right? Producers Price Index, and that's also inflation is coming in higher. Everything is coming in higher there, right? Everything is forecasted to come in higher. Unemployment claims is forecasted to come in higher. So this is going to be interesting to see what happens here. And British pound retail sales as well projected to come in lower because people are now trying to save money because of the state of the economy. We're going to see what happens here as well. Let's see. So this is a heavy fundamentals week. I think we're going to have big moves. And finally, we can break consolidation related. A lot of instruments are in consolidation at the moment. All right, so let's look at dollar index, the US dollar index, and what do we see clearly? Nice, clean move to the upside after it held our area of support that we've been mentioning for the last few months. And one thing that's interesting is it hasn't yet completely broken through these areas that we mentioned last week at 104, because once that area breaks, that would confirm our bullish bias on the weekly time frame. And if you look at the daily time frame, clearly we are bullish, right? So I would wait to see if the daily can break this consolidation there. Maybe it can only break after the CPI data comes out. And if you look at this bullish candle there, that was because of University of Michigan's consumer sentiment.
So based on, I guess, our fundamentals that we've just looked into, we're kind of expecting CPI to come in higher once again. kind of validating the bullish scenario here.
It's forecasted to come in lower, but I think the core CPI data was gonna be interesting. If that comes in higher, I think we might start pushing up, and that can validate our bias, hopefully.
Okay, and what the key levels here now to break?
104. So 104 would be probably the most important level that everyone is looking at. And if it does pull back, possibly it can pull back all the way through here, maybe find support to maybe at the start of the week, possibly, and then maybe take off.
And what support level is that? 102?
102, let's call it 102.5, 102.4, around that area. 102.3, 102.4. Yeah.
So if we don't
So-
get a break on the upper boundary at 103, we're kind of expecting it to come down to 102.4 before moving backwards up.
Yeah.
And that would confirm our breakout above that level as well.
Exactly. Yes. Yes. So let's see what happens this week. It's going to be interesting. Aaron, you want to look into crypto?
Yeah, do you want to pull up a Bitcoin chart?
Yeah.
And I think we're probably going to see some similar patterns across most of this, and it's all really going to rely on what the dollar's doing.
So Aaron's call last week was spot on at 24K. You see a nice clear movement all the way down.
Yeah, nice breakdown, little double top there. I think that double top occurred on the daily. And now it looks like we're kind of retesting that level at the 21.5K level, which I said last week was a key level to break. I think we might have actually had some liquidity all the way down to sort of 21.3K. And that was very quickly bought up. And I think that's just because everyone's interpreted this level as a good spot order position to kind of enter as well. So we had some buy up in that area. I think if we drop down a time frame, you'd probably see it as well, that we are going to be sort of consolidating in this range, and we're not going to get any clear direction until the dollar makes its move. My personal sentiment is still very bearish. I would say that if this support level holds, we could see some more sort of upwards momentum. But as I said, look, my sentiment's down, and the sort of our next key level below here is around 19,880. And I think those that are in the sort of BTC or crypto market for a while, that would be the 2017 high. And I think if we hit that level again, we're going to get a lot more downside momentum. So I guess all eyes on this, yeah. So all eyes on this and CPI. I think if you want to pull up a BTC CME chart as well.
What's the ticker symbol?
Oh, I think you might need to Google it. I don't think you can actually just search it through TradingView.
Oh,
so if you...
this one, yeah.
Oh yeah, there you go. Sorry, there you go.
Yeah.
So we have got some CME gaps that were formed. Quite a major one. You see that big boy? So the key level there is quite a significant gap. What is that range there that we need to come and fill?
It's at 20K area. It's over here, right there, around the 19,900 all the way to 20,900.
So that once again kind of validates what I just said before, that 19,880 level being very key. That's where we would fill that CME gap that's been created. When was that created actually? Was that back in December or Jan? Back in Jan. Yeah, so that's where we're looking on the sort of CME, but yeah, we're definitely going down. I did take a position here at that 24K. I took profit at 21.5. I'm just kind of looking now to see what we're doing, but still, I guess my sentiment is on the break of that 21.5K level.
Yep.
There's been a lot of, I guess, news in regards to having a golden cross. Do you want to stick up a 50 and a 200 MA?
I think I maybe have. Oh, let's leave this. Let me add it.
MM is just adding. indicators for those that are listening.
All the listeners.
I feel like, you know, the woman who comments on for deaf people. As we grow, I think I might hire one of those women just to sit in the corner of the chat.
A
Yeah,
little phrase your voice on.
So
that on which time frame?
well, daily's obviously the bigger retail one, and people have really been paying quite a bit of attention to this. That there is a potential of a golden cross here, which is a huge retail signal that we enter into a sort of a longer term bullish cycle. I think a lot of this has come down to historicals as well on pretty much every asset class. A good reference for, I guess, our last golden cross was back in 2019. That signaled a big movement. We had a fail of this in 2015. So all eyes are on this right now. And if CPI data does come in higher and we get a bullish movement on the dollar, I think we're going to see this sort of golden cross be invalidated. So everything right now is resting on the CPI.
Yep.
But on the, I think you'll see on the daily, we've been respecting the 200 MA right now as a resistance level.
Would you say, obviously, with the market being primed, waiting for fundamentals and the technicals the way they are, we're going to see a big move once we get a decision?
Yeah, I think so. I think the market's just really looking for some decision.
It's just accumulating, isn't it?
Yeah, exactly. I think if we, do you want to go into ETH?
Yep. Let's look at ETH.
And like, once again, here on ETH, there's no, I would say,
We do have a cross here though.
we have a
That's
cross
interesting.
here, but if you look here, we've actually had some bullish momentum already. So it's, I think what it comes down to is if this indicator's lagging.
True.
But as I said, I think on the last call, we've got Shanghai upgrade coming up as well. So there is possibly a lot of individuals looking to push the liquidity up because they've held ETH in that contract for over, I think maybe close to 2 years now. So once that unlocks in March, they might want to look to sell at the highest level. So the key level here is ETH's 2017 all-time high, which is at 1,420.
1,420. That's interesting because it's kind of, the cross kind of occurred next to it, around there.
So how would you interpret that?
Yeah, I don't believe in heavily in indicators at all, but I mean, that's interesting to see. That's kind of correlated. The
Yeah,
highs.
very nicely on it, huh?
Yeah, quite interesting.
But once again, like ETH's decision right now is going to rely on BTC's decision, and BTC's decision is going to rely on what the dollar's doing. So everything's on CPI. So I guess that's on the BTC and ETH side of things.
All right. Let's look at indices then. Let's look at US30, Dow Jones. Dow Jones, exactly like the other pairs, it's been stuck in consolidation for the last few weeks. And by few weeks, I mean all the way from November, right? And it's been stuck in that range. And if you look at the current week, the way it closed, it was quite choppy, right? It's not telling us much. There's not much. That's an indecisive doji candle, right? Closing between. So nothing there, nothing interesting to see. Let's look at the daily time frame. The daily time frame is also stuck in a consolidation. Like this is a weekly consolidation area that I've drawn out from around the 34,300 to 32,850 area, the orange area that I've drawn out. And if you also again look into the daily, we see a consolidation again inside the daily itself, right? And if you see, what do we see? Consolidation. So there is a lot of indecision, and anyone trading Dow Jones, it would be advisable to wait for trends to let this consolidation to break in as a whole, right? So if you're a risky trader, I wouldn't suggest it, but if you want to trade consolidation, you can. And maybe if you want to, maybe these areas that I've already marked out since the last 2 weeks itself.
So what levels are these? These are at 34.
Yeah,
300?
34,300. Yep, 34,300, and the bottom range is at 32,850. Perhaps you can take a short position there, or you can long at 32,850 as well. But I would suggest to not do that because it's easily you can get liquidity grab. I would suggest maybe actually the opposite end, maybe let 34,300 to break and then take long positions, or let 32,850 to break and then maybe take short positions. That would be a much higher probability, right? So nothing has changed with US 30, right? Very choppy movement. So let's look at SPX, S&P 500, or as some people like to call it, US 500. Let's look at the weekly chart.
SM, who likes to call it that? I've never heard that in my life.
Yeah. I mean, a lot of actually, funny enough, a lot of brokers they give you the S&P 500, the instrument as US 500 cash.
Oh, really?
That's
I
what
didn't
they
know
call
that.
it. Yeah. So clearly, what do we see with the weekly time frame? It's in a bullish stance, right? Monthly remains in a massive consolidation area. You see that? That's a massive consolidation. So monthly is not telling us much. The weekly is kind of bullish, and the current weekly candle close somewhat bearish. But maybe you can interpret this as a double top. Maybe, perhaps, maybe the daily time frame will give us a clearer vision.
Do you see some, it almost looks like it's not as synchronized, well, BTC is not as synchronized with the S&P as it has been for so long.
Yeah, exactly. That's the thing. And if you look at the daily, massive resistance. What do we see? Price came here, rejection at this 41.50, 41.50, let's call it 41.75 area, and it kept rejecting that area. And now what do we see? If I draw out this clearly, what do we see? A nice M formation create, double tops, and now we see a move down, right? Maybe this week, the current daily candle which closed, perhaps goes here to find resistance and then drop. But again, this is just for illustration sakes. I wouldn't suggest trading it yet. Let's look at because if you want to take high probability short positions, that would occur only if the weekly structure breaks, and the weekly structure breaks at 39.70, right? And if that can break, then maybe you can take high probability short positions. But if you want to actually if you are a daredevil and you want to take lower probability short positions, perhaps that's possible at SPX, maybe at that retest at 4100, 4110, let's call it 4110, right? And then maybe you can take a short position there. Let me mark that out. So there, that would be an interesting area to see how that works out. So that's the only two areas. Maybe on the weekly, this area here at 3850, I marked that out. I think that's because that's where the monthly consolidation breaks. So this is a longer time, longer target to see if price can reach here and break this area, right? But for now, this week, maybe keep your eyes on 4110 retest and 3970 break. All right, let's look at GU now, the forex side of things. GU was also quite dirty this week. What do we see? A doji candle with no much volume, right? So it's not telling us much. And one interesting thing is we see double tops in a way there, right? So that's a bearish indication. And what do we see? The bearish tops. Actually, let me draw this out. That will be a little bit clear. You see bearish tops form, right? And what do we see happen this current week? Price broke down the neckline there. And what do we see? Let me stress this out. What do we see? Price broke the neckline and it's still holding around this area there, right? So still it isn't confirmed bearish yet. And one thing, just by looking at structure points though, if you look at structure points, what do we see? We see a bearish over here. What do we see? Price has broken through, the body of the candle has closed below. So therefore on the daily, technically it is bearish, right? So let's look at the daily time frame perhaps. for a clear price action. So the daily is clearly bearish, right? There's no denying that. What do we see? Lower highs, right? Lower lows, lower lows. So I would say with especially with this, maybe I would wait for CPI to come out first of all, and maybe you can take position only after this area here breaks on GU possibly at 120. 120, let's call it 120. Let's let it 1.20 break, and then you can take a position there. Let me move this. One 1.20. All right, let 1.20 break through, and then we maybe possibly take a position. See, you see how the price action is very choppy with the higher time frames. So let's look at the lower time frames and see how price is reacting. So what do you see with the lower time frame or the 4-hour time frame? Head and shoulders, right? Nice indication of bearish price action. So I would say maybe wait for the 1.20 area to break and then take a short position to see if your confluences match up, right? Your entry candles and stuff. So yeah, that's with GU. I probably will be only looking at this spot here at 1.20. Yeah. Let's look at GJ, British Pound JPY. Again, British Pound JPY has been stuck in consolidation for quite a long time. I think since December, 27th of December. So 1, 2, 3, 4, 5, 6, 7 weeks it's been in consolidation. And the analysis hasn't changed since the last week either. What do we see this week happen? Price has created another consolidation inside the daily range, right? At 159,450 to 157,900, let's call it. So still inside consolidation, heavy consolidation. I would say wait for price to break at 161,750 and take a long, or maybe let it break at 156,250, then take a short position. So nothing has yet to happen here. So same areas that I mentioned last week. Let's look at gold then. Gold as well. What do we see with gold candle? The gold weekly candle is kind of similar to the GU candle, right? So there's not a lot of price movement this week. Very choppy, right? Doji candle. And if you look at the weekly, time frame, though, if you zoom out actually with the weekly time frame, gold still remains technically bullish, right? Why? It's because the structure points still are holding all the way down here, right? So if I want to see what price does at this area here, once price does reach this, if it reaches, which is at 1800, around that 1800 area. So if 1800 price can come through, find support and take off, then that will be really good buys. Or if price actually breaks through there and breaks through at 1790 area, then that would be very high probability short positions. But for yeah, go ahead.
That doji candle really does show the indecision in the market right now.
Yeah.
Like you can see, like if we don't hold these levels, then we do need to retest that breakout that you've drawn there, that key structure point.
Yeah, right there.
And again, that's healthy growth, in my opinion, as well. We can't go on these sort of high momentum charges and not have some pullbacks. And I actually would prefer to have a pullback to that level, as you were just saying, before looking for a position.
Yep, exactly. And one thing to me that's interesting is the monthly chart. I wonder how valid this triple tops will be. Can price pull back all the way through down here? That would be very interesting to see. But if that can happen, but if price can break through,
it's a big range, though, isn't it?
It's a massive range.
Yeah, if you look at that, it's just a very big weekly range. We've obviously got I guess you could say that's a false breakout there.
Yep.
So what is that key level there? About 1,700 at the bottom level. Am I right there? A little bit lower. Yeah, just at the end of the higher. At the end of the wicks in July, between April and July.
between
2020.
April and
2021.
are you on the weekly chart or the
No, I'm
monthly?
looking at yours
Okay, okay.
on the monthly. Hang on.
July. Yeah, over here.
Yeah, just draw
Is
it
it-
there actually. Yeah, draw it there, it's fine. It's this level here.
Yeah.
Sorry, I'm drawing
Okay,
on this
okay.
one.
Okay. So right here. Right there.
Yeah. So that just looks like a quite a large weekly range there. You could say gold has been consolidating for X number of weeks.
Yep, true. So that's interesting to see in the monthly, but obviously if you wait for the monthly candles and for monthly, literally the monthly trend to switch, we'll be waiting forever, right? So we are day traders pretty much. So we will look at the weekly, and the weekly, the most significant area is for me is these areas here, at 1800 and 1790. That range there would be interesting to see. And I want to see if price with the CPI data can get that massive push there. Let's look at the daily. So the daily has been interesting. It did not, if you notice the price points that I've mentioned here, price hasn't reached that 1920 area that I mentioned last week. I was waiting for a retest, and possibly there is possibility that price can still retest. So if you look at this, what do we see with price? Price has broke that structure point there. Let me actually clearly draw this out. What do you see? Price has broken through that structure point, is now holding that area as resistance. Yeah, so that's a nice bearish indication. Let's see what else. If you notice that this yellow area that I drawn out, I drew this out when to see if price can break this consolidation. But if you look at the body of the current candle that closed, it closed above that yellow area there. So it's still in consolidation technically, and at the moment it closed there. So it's still very choppy. It's very choppy. It's not telling me much. Let's look at the 12-hour chart. 12-hour chart is interesting. If you look at the 12-hour candle, we see a bullish candle, but we see the momentum slow down on the 12-hour. Let's look at the 4-hour maybe. Let's see, the 4-hour is also interesting. 4-hour as well is not telling us much either. Still, 4-hour is in a tiny consolidation area, but not telling us much. Possibly 4-hour can move up here to fill up those price gaps. So I think this week it would be interesting. I think price is already at if you want to take maybe short-term lower probability, maybe medium probability short positions, maybe keep an eye on only on the structure point here that I mentioned, which is at 1865.15. Let's call it 1865 and see if price can continuously hold this area as a resistance. Because if you look at the lower time frames, it is holding it as resistance at the moment, but I want to see a little more proof, right? That it can hold, because it's highly likely also that price can do something like take all these sellers out and make its way to 1920. So 1920 still is an area of interest to me if you're going to take short positions. And again, if price can hold this daily structure point at 1865, possibly also a short position, but this would be, you have to be extremely careful here at 1865. And again, I would say wait for CPI to come up, right? And the longer term vision would be to see the 1800 area down here and that 1790 area down there. I'm not going to mark it out, but that I just want to mention to keep an eye out on those areas. Yeah. I guess that's it with the technicals, I guess. Yep.
There you go. Oh, money.
Yeah. What's
Money
the
team.
documentary? What's the documentary last night on BNF? You're on him.
BNF.
BNF?
The Japanese trader.
Oh
the
yeah,
J-Con
I
man.
think I know. Yeah. I forgot.
You trading the Nikkei 25, is it? He was like he trades the bear market, so he come up with a strategy when price moves away from the 25-day average, and he was working out he was working out what percentages for what instruments, and he was just buying the pullbacks on bear markets, and he fucking made hundreds of millions. Like,
Yep, yep. I think I've seen that
yeah, but
documentary. Yeah, yes.
I'll link the documentary. It's like it's not, it's like they've made it into like a little bit of a film. It's cool. Like, I'll link it in the group.
Sure. Oh, one thing I forgot to mention actually, that's good you reminded me about Japan. Though with fundamentals with Japan, one thing that it's interesting, very interesting this week, is Bank of Japan is electing their new governor, right? So depending on which governor they elect, that would be seen if JPY would be bullish or bearish. So that's going to
That's
be
what I was
interesting.
getting to. Yeah, that's what I was getting to. Isn't that like a viable, not a viable strategy, but isn't it? You know, to start looking towards the Nikkei, the Japanese markets, and that obviously with what's going on over there.
With their
Yep.
bond buying like no tomorrow, so we should see pretty much the same uplift that you see in when the US is in QE. So they've entered a huge, a long period of deflation, which was actually the concern for the US when the pandemic happened initially, was that they were going to enter a Japanese-like deflation. But yeah, Japanese market should start pumping now, I would say.
The decade or something. What was it? The long decade or something.
Yeah. And for things are
Uh,
very expensive there. I think
It
Tokyo is one of
mentions
the
it
most
was like
expensive.
in Japan they had their own crash, and it was called the long decade or something. Where it was just for a decade. They just had declined, didn't it?
Yep. Kev, maybe you can something I do, at least I don't trade the Japanese futures, but I look at the Japanese futures for just some indication on what's happening. So this is the Japanese yen futures contracts. Maybe you can look at this to see how the economy
Yeah,
is doing.
it's because I trade GJ. Obviously, I'm starting to understand now. I trade gold and GU, so I use the Dixie to
Yeah.
obviously on a long term bias. But with GJ, obviously, it's just
Yes.
I'm trading
Exactly.
GJ.
Exactly. Good point that
These
you mentioned.
fundamentals.
Look at
Yeah.
the yen futures contract that I mentioned here. The ticker symbol is 6J1 exclamation mark. And there's another one that I look at is where was it? Let's see if it's here.
So you use that like the Dixie in relation to the GJ.
Yeah, kind of, pretty much.
Yeah,
And there was
yeah,
another
that's
one.
cool.
There was another one, I think, with JPY. I think it was with fxcm. It was kind of like the Dixie for JPY. I think it was called. I need to look at it. I'm not sure where it went through. Oh yeah, this one. So fxcm has a yen index basket. So this is the ticker symbol, JPY basket. So this is kind of like the Dixie, pretty much, for JPY.
Yeah, I'll start analyzing that definitely.
Yeah, you can look at these, and clearly you see it's kind of bullish, but it was in a massive bearish trend for a very long time, right? So
Yeah,
so let's see what happens
the
there.
inverse of the Dixie.
But the Dixie does still have a lot of effect with JPY sometimes as well. So it's good to look at both
Yeah,
when it comes to that.
obviously USD JPY. I look at that.
Yeah.
You know what I mean? But I was just obviously watching that last night and the way he's trading that Nikkei. I thought I need to start focusing more on the Japanese market when I'm trading GJ. But do you ever look at the bond?
The bond, Japanese bonds. I think
No,
I
the
have it.
bond, the euro, the bond, BUND.
BUND, no. I don't think so. I've ever looked at it either. Let me see.
No, I started looking at that. So obviously, Tom Dante trades it, doesn't he? So I started having a look at that. And I entered the shop. On a demo. I entered the short position just off a trend line on it, and it went like, you know what I mean. But yeah, I was just looking across other instruments. Obviously, I'm not branching out, making focusing on GU, GJ, and gold, but just my interest's growing. You know what I mean?
Yeah, no, that's always good to learn all these different instruments. But one thing, at least I suffered when I started looking at indexes, the currency indexes. I would base off my trades based off on the movements of the indexes, and that would you wrecked my account so many times. So sometimes I tell people to not even look at the Dixie, maybe not even look at the Dixie or even the JPY. Just look at the technicals on the exact instrument that you're trading at.
Yeah, I think
Yeah.
that's
Point
a
out.
good one. Yeah, sometimes
Sorry.
too much data is overwhelming.
Yeah,
Yeah,
exactly.
I've tried to trade the Dixie against gold on a smaller time frame, and I've seen how the Dixie moves on a smaller time frame, and it literally draws you in, leaves these big wicks, and goes the other way. And like, They say I use the distance to me long-term bias. Now I don't scalp against it no more. Fuck that.
Are you still on the challenge? Are you still doing it?
I'm 0.5% in profit, so I'm just calling it a day on it. I've got a week left on it. So
Oh, okay,
like
okay.
I say,
That's best.
with fundamentals. Yeah, that's with fundamentals and stuff. It's fucking. I'm just gonna get me reset and then wait for the market to pick its direction and then get in with my first trade. So start the challenge as soon as we start seeing direction. Like
Okay, okay, yeah, that's best, bro. You, I think you're already almost there. You're already a break-even trader already in a very short amount of time. This is very interesting to see. So you're gonna
I
be
can feel it.
profitable very quick.
Yeah, man, I can feel it coming, man. It's just these calls, everything, mate. It's just this is my world now. You know what I mean? It's fucking it's exciting. Like it's the future's bright, mate. I can't wait.
Awesome, bro. Awesome.
Amen.
I wanted
All,
to like I wanted to obviously with crypto now I'm gonna start DCAing again, but I want to focus on obviously trading with leverage and on the future side of thing. But with Binance at the minute, I don't know what's the other option? What would you use rather than Binance?
I am still trading on Binance, in all honesty, but I'm kind of limiting what I'm holding there in terms of position sizes.
Yeah, because
So
it's like basically I'm just gonna throw like $500 or something like that, and then just trade at low risk with leverage and try and build it. But I'm thinking about throwing $500 on Binance now. Is it wise?
yeah, look, I'm also I'm using Binance because it's easier. Sometimes just I've got P2P, so I can onboard easily, on ramp, sorry. But I'm also then transferring out onto DYDX and using that as now my main trading account. And DYDX has seen huge growth recently as well.
Yeah,
So
yeah,
everyone's moved over
into that
to.
position. The one where you said it was at its all time low, and obviously it went from I think I bought the spot bought like $30, and it was at like $120 or something, and then that's like why the fuck didn't I just trade that with leverage?
But yeah, like I'm trading on DYDX. I'm enjoying that. Another platform I've been using, right, just playing around with is Hedix. I'm not sure if you've heard of that one.
DYDX, mate, I'm gonna go down that route because I'm liking that as a token. But like I say, but after entering that trade and watching how it's moved, obviously it's left a couple of gaps. So I'm expecting it to come down towards me. But with it being the all-time low, is it gonna come back down today? But yeah, I'll set up an account on DYDX. I'm starting
Well,
to
it's all
starting to like that
decentralized
thing.
as well. So take a look at DYDX, and if you stake DYDX, you're also getting rebates essentially back. Um, there was a nice little strat you could use there, even like likes of Uniswap. But this is what I'm playing around with at the moment. Should I share screen for those that
The
are
issue I've
listening?
got is still in the UK we have limitations of what I can onboard with. So basically, I've been using Coinbase, so I know I can on chain with that. So I'd have to buy like USDT on Coinbase, send that to Binance, buy DYDX on there, and then send that to. Like I'm still not like I'm still not too savvy on the crypto side of things, to be honest. Like
Yeah, look, it's a much bigger picture because you're looking at it at a layer that I guess a lot of retail investors don't even see, unless you're an institution, and even then, like on the infrastructure side of it, you don't get to see all of this, because all of this exists under, I guess, a new name within the crypto industry, but it's something that's been used. It's just been decentralized. But this is what I've been using quite a bit, just playing around with it, which is Hedgic. Very similar to, I guess, Friction on Solana, where they use option vaults. So they've basically got option products. You've got call products, you've got a bull call spread, a bull put spread. So a options product, depending on the market situation. So a bull product, and for every one, you've got 3 different products for. So a bull, a bearish product, a high volatility product, and a low volatility product as well. And
what does it mean product though? Is it product as in like what does it mean by product?
in terms of an investment product.
So an investment product is basically like a futures market, spot market, like that.
No, because these are more on a contract basis. So, for example, these options here, you're investing for a period of time. If you look here on the right, you put in the amount of calls, because I've selected a bull strategy, sorry. So we've activated a call.
So you don't enter with the TP and all that. You've got to play that 7 days out.
So there's two different options, and this is where I'm trying to work it out. And I'm learning on the option side of things, to be honest. It's not something that I've ever done, and a friend of mine's teaching me. But you've got European and American options, and one allows you to sort of cancel the contract before the expiration, and European sort of ties you in the whole way. So obviously not being tied into the contract is best, and that's where the sort of the bigger options markets are.
Yeah, so you can still close the position at a loss or at a gain.
Exactly.
It works a little different. I traded options for a little while. Calls and puts, obviously, I guess you know that it says buys and sells, right? Calls, they call it calls and puts. They have different type of contracts. The amount of contracts you buy it isn't lot sizes. It's the amount of contracts you buy depending on your leverage, and all the contracts have an expiry date and stuff, which you need to look at. So it's a little different. But I have a friend who scalps. He's a scalper with options. So it's a quite interesting instrument to play, but it's super volatile. Depends on your risk appetite.
Well, if you look at here in terms of the data, like this is a 7-day contract. It's a strap position, which is another bull product with a $234 investment. You're looking at a net profit of 264. This is based on what they're expecting market price. So it's taking the data of what other investors are looking for and expecting, and then processing this information.
So it's straight up giving you an expected outcome, like the probabilities is that you're gonna win that one.
Yeah, and look, it's actually expecting this is on an ETH market. It's expecting ETH to be quite bullish for substantial period of time.
Is there any way of backtesting that?
Sorry?
Is there any way of backtesting the credibility of that?
Not really. You're just riding the product, but it's all TA based.
It's just mad, isn't it, for a broker to be giving you that, like, it's just mad that.
Well, there's different ways you can do it. Like one thing that's in a friend of mine. Oh, that's a big position there. You're looking like, but this is where the money is in options, by the way, from a trading perspective.
So that $2,500 investment, 23K return was that?
Yeah, so based off, I think this is a $752 investment. You're looking at a 300% on a 7-day contract expected. So that based on right now, so market sentiment for the next 7 days is still looking quite bullish.
So you can just use that as an extra compliment, really, can't you? So when you've built your TA and you're about to enter your position, you can look at that, and if that's giving you the same result, it's just an extra compliment, isn't it?
But like it's actually expecting price to. Let's actually check it. Go on to. Can you just? Oh, sorry, I'll do it. Actually, no, I haven't got treasure. I've got trading view. Give me a second. I'll pull trading view up. Is there a key level at 27K?
1 second, let me look.
I've got trading view here as well. 1 second. I guess that's your way of back testing it. Is that okay? Here's 27K. This is an hourly chart. Give me a second. Pulling up onto a daily chart.
27.
That's predicting a move to 27K.
So 27K, there is a level there on the daily. Do you see that?
And we've got the golden cross.
Yeah, I have that area marked out as 26,700. Yeah, it's around there. There's an area.
So based on that, like now if we pull, let me just go back to sharing the Hedgic platform. So that's the level it's calling 26,944. So that's your way of kind of validating that, okay, we've got some short-term bullish sentiment there. But that's expecting it for, I think based off this, we're kind of expecting it to go to this level and consolidate for a while. So you're not really going to look to do a 90-day contract.
But this is not exactly like manually trading, right? Because they are setting your profit zone and your max loss zone. So you invest the money and they kind of take the strategy, right?
Yeah, so you just set your strike price.
Okay, that's it. All right.
So like here's the level, we got a strike price. We can set a strike price at 20% gain. And see that 20% gain, expecting it to go to 26. that key level at 26,240, that's a 6,000% off a $43 investment.
Have you played an arm with this for a bit? Say, or have you not entered nothing yet?
No, I've just been messing around and just trying to read up on it and learn. I've connected my wallet just to see and interact with a few of the pieces. But I'm definitely going to start getting involved. But you see that effectively, from what I understand, a strike price is kind of like your take profit.
You're a 10% gain, so you're after a 30% gain on your TP now, aren't you?
Yeah.
On the $30, is that 2,008?
But some people just like you think gambling gets bad on like with traders. Like I know people that they live fast as option traders.
Oh, options is something else, bro. It moves like madness. These guys, I do not know. They open these massive contract sizes on a 1 minute time frame on options. It's madness.
Fuck all that, mate.
And you can actually build strategies on here as well, which I think is quite interesting. Oh, they've got a leaderboard.
So is the script in there? Is there any script in there to put?
I'm not sure. That's what I need to go into. Like this guy here has done 187 contracts.
But look at his P&L.
His P&L is
minus 52.
Like the biggest loser here has lost $18,000 on 3 contracts. This guy felt it hard, but then you get this guy, like he did off 3 contracts, he did 1,125%.
What?
And he made that's a $7,000. So this is probably one of those situations where he's put probably like a 2-digit number, like maybe like $70-$80, and that's his flip. But then you get someone up going in larger, and for example, the one above who's done 12%, he's made 28 off a 2.8 million volume. So his P&L spent. Look at the size of his contract.
18 contract.
Yeah.
Could you open and see his trades? Is that possible?
What, the guy did 18?
Yeah, no, the guy who did 1,000 in 3 contracts.
7. Is this with
block?
Yeah, F value $40. What was that at the top then? Oh.
Yeah, so he did a $40, $40 contract. That's what he opened up.
And he made that. Oh, mate, that's fucking. Congrats to him, mate.
But this is where like there is a lot of potential out there where you've really just got to deep dive into it now, and just play around. But look, it's a learning thing for me as well.
These scare me. I don't know why, mate. It's like the decentralized things. It just I don't know why it just scares me.
I think everyone that's expected. In all honesty, you're custodians of your own money, so you haven't had that level of, I guess, detraining on schooling.
Not even sending money from one wallet to another. It's fucking. I don't know why. My heart's always in my mouth when I press go and it's not there. And it's like, oh, shit, where's that? Like when I sent some over last time, I've sent it, and it's doubled in my account. I was like, what the fuck? And then I thought, I just pulled money from someone's account here, and like, my head was gone, lad, and then it all disappeared. It was weird, man.
Don't worry, like you'll get used to it eventually. Like one thing that does my head in when I first started using the ledger was the time it takes to do a transaction from the Ledger Live program. And especially when you work in DeFi, and like I spent over a year playing in Solana, so you're used to these sort of quick transactions. And this was taking hours, and I'm just like running my head to mad, thinking, oh, I fucked up, I've set the wrong code. I'm looking like pulling up the transaction. Have I got each bit right? I'm writing it down like 30 times like Bart Simpson in detention.
Oh man, it's horrible. I hate it, to be honest, mate, and I'm only sending small amounts, but like you say, it's anything new. It's the fear of the unknown, isn't it?
Exactly. But you can see, look at the money people are, the percentages. They're there. This guy's the most efficient.
So what's the minimum? What's the minimum price for? Like you say, there was $40 ones. Then I'm just gonna put $50 in that, mate, and just.
So it's scaled, I believe.
Can you do gold and stuff on that, or is it just crypto?
No, there's no. So this is all it's BTC and ETH based on Hedgic. However, did you see the platform that I sent yesterday in the group?
Yeah, that was interesting, that one, mate. But once again, that just scares me. It's like I wouldn't want to put money in that because it's new. You know what I mean?
So a friend of mine has been playing with it, and it seems to have quite a bit of volume. Should I pull it up? What's it called? G Trade, I think it is. Gains.trade. Does anyone have a? Oh, I don't have a Coinbase wallet. But you can. The volume on here is 27 billion. So from a volume perspective, I'm not too concerned.
Yeah, that's fucking. It's not getting manipulated easily.
And they're on Arbitrum. Arbitrum's doing amazing. Like I think from a layer 2 platform, Arbitrum is great to use, and I've been using it. I was using it on Uniswap v3 for the concentrated market making or liquidity pools. Oh, we see that keyword, highest leverage available.
150 I seen on it, but I don't know. That was on one coin I was on. It was on 150x.
On here,
Yeah, it was.
I think this might be the platform. A friend of mine was telling me that there's some platform which has like some mad percentage of leverage, and it's just like basically like a degen platform.
Yeah, but I went on BTC or not, and I just opened it up and it was on a mad coin. I can't remember what it was, but it just flagged. It let me go to 150x, and as soon as I seen that, I just thought, "Oh, step away. I'm not ready for 150x."
Let's see. Like you got Euro USD here.
Yeah, look at that 1000x leverage yours goes to
Where?
on that instrument. 1,000. Is that because? Oh, that's because it's a
Oh,
forex pair, though, isn't it?
Yeah, it's 1000x.
But that's because it's a forex pair, and that like how lot size work. Because obviously forex moves tiny percentages.
Yeah, you can do 150x on BTC.
But where is the liquidity going to?
And
If you're
gold
trading,
250x.
It gives you liquidity price at the bottom.
yeah, but who are they executing the trades? Are they sending the orders to a proper broker? What's happening? Like, because they say they're decentralized, so I wonder how they are executing the trades.
Yeah, I haven't got that far.
Yeah.
Some cash on board, innit? Some fellas
I think we can find something in the documentation here. I'll do some digging.
Yeah.
But I think, like I said this months ago, the next level of growth, the next bull market will be led by derivatives. $1 trillion market.
Like the derivative market. What is that?
What we do, trading.
Trading. These are all derivatives.
Derivatives means trading, like day trading and stuff.
Yeah, because we're not trading, like for example, gold. We're not trading gold, just the metal itself. We're not like physically spot trading it, right? So we're trading the derivative of it.
Okay,
Which is like saying you're trading a form of it.
Yep.
Yeah, I've just never delved into that.
Yep.
So I can't find anything on FX specifically. But they've got one-click trading, which is it's very...
One-click trading at 150x. Let's go.
Yeah, I need to do some digging to see how trades are actually executed. But I'm wondering if they might even have like a decentralized pool. Like imagine if you could do Euro USD against... like you're doing USDC against, I don't know, Euro C.
Well, can you only do USD pairs? Is it to do with Tether? Like, is it to do with stable coins?
No, these are actually just USD here. So S&P
So
against
can
USD.
you trade non-USD pairs? I mean, like, can you trade GJ? Do you know what I'm saying? Or is it all USD pairs? Is it backed by like? Is it anything to do with USD? Oh no, I've seen Euro GBP then.
There's Euro GBP. There's no. I don't think there's any JPY. Oh, there is. There's.
Oh, yeah.
And those markets are closed. So.
Yeah.
It might be to do with. Yeah, interesting. Anyways, I need to go, guys.
Yeah, same boys. All right. Take care, guys.
Thanks a lot, guys.
Bye.
Take care.